Still got this, I suppose, sideways consolidation at the bottom of this rising trend channel, which has been in place since the beginning of last year. Just looking for a breakout, I suppose, 85, 90 pence, something like that. But with the 50 and 200-day moving averages rising, already broken that resistance line there from May back in November. So it looks as though the shares are on their way towards a potential £1.50 target over the next 2 to 3 months, or even sooner. This stage only really back below 60 pence, really questioning the upside on that stock. Stock which I have to say surprised me with the recent decline that we had on Avacta. Supposed to be a sort of solid gold situation, but we had that horrible gap down after an island gap, actually, which was probably almost one of the worst charting configurations you can get, down towards the, what was that, upper 60s, low 70s type of thing. What's interesting now is that we've got the bottom of the gap there at 97.5. End of day close above that would be a basic reversal signal. We've already had the shares down at the most oversold they've been in more than a year. So that was, I suppose, in a way, an aggressive buy signal for some. Otherwise, really, above the neckline resistance over the past couple of weeks at 87 pence, we're looking for a move up towards the main June resistance line there. Just shy of £1.20 over the next 4 to 6 weeks, but we need to hold that neckline at 87, or if you're cautious, you wait for an end of day close as a momentum signal above 97.5, the floor of the January gap. Moving along to a stock which I don't think I've covered for months, perhaps even years, Archon Tech, but thought I'd bring it into the mix. Here we've had a rebound from the big breakdown the shares had in November, down to 73 pence. I suppose the reversal signal came with the break of the initial January resistance at 80, and above that we're looking for hopefully the shares to get up towards the bottom of the gap from November, as high as 109, 110, or 110 rather. If you're cautious, you wait for an end of day close above the 50-day moving average at 90 pence. But with that bullish divergence line there, looks as though there could be some momentum there, at least through the £1 area over the next couple of weeks or so. Alien Metals, with its bonanza, is worth reiterating again. I interviewed the company a couple of days ago at the end of the week, and that was very exciting for all concerned. Here we've had a gap through the falling wedge. Managed to close the week above the 200-day moving average at 0.86, which was very impressive as a first go, let's say. And that leaves us with the next target here, the top of the gap down that we had in November at 1.03 pence. So at least a sort of 10% on the upside there, hopefully even without too much effort. Big picture target for fans of the shares up to 1.5 pence, which is the top of the January 2021 broadening triangle. This stage only really well below the 50-day line at 0.7, delaying the upside scenario, but that seems to be relatively unlikely. Moving along to another more obscure situation here, we've got Cyber, which has managed to give some bullish signs here in the recent past. Over the last couple of weeks, we've got support coming in at and above the 50-day moving average at 1.74 pence. Above that, looking for a move towards the top of the July triangle at 2.8 pence, maybe over the next month or so. If you're cautious, you wait for an end-of-day close through the 200-day moving average at 2.07. So, well positioned there for Cyber, I think, over the next few days for a breakout. Arguably the best stock here today in the selection is Coro. The reason for saying that is that we've got this extended base for the shares. I suppose we've had a double cup and handle situation here with the failed breakout through 0.35, but hopefully this week we'll get through 0.35 and head up to 0.45 at the April resistance line there. We've got a bullish divergence line in the RSI window as well, which should power the shares towards 0.45 or perhaps even higher. There is a top of gap target there as high as 0.52. So everything to play for there at Coro while we're above the 50-day moving average at 0.29. On to another company that I interviewed during the week. Here we've got Falcon, and nice bull flag breakout to end the week. V-shaped bull flag. In fact, it was a gap through there, so that does imply that we've got a decent amount of momentum there. Above 12.2 pence, looking for at least 15 pence, which would retest the September resistance. And if you listen to the interview plenty to shout about as far as Falcon is concerned at the moment. Now a request from an ardent follower, GS Technologies. Here you can see that the shares have been in consolidation mode after the double top there through 3 pence for October, November. I suppose that resistance line is actually up there at the 50-day moving average, so that's at 2.1 pence, and that's really the level to break. But on the in terms of the support zone for the shares, we've got the floor of the rising trend channel from the beginning of last year. We're right at the just above the floor of the channel there, around 1.6 pence, so above 1.6 on an end-of-day close basis. We'd be looking for the 50-day line at 2.1 pence, but the big breakout required as an end-of-day or a weekly close above 2.1 pence to get us back to the 3 pence area. But if you're a fan of the shares, this looks to be the dip to buy into and the level to buy into as well at the bottom of that rising trend channel from last year. Stock which got a lot of people excited at the end of last year was Ironveld, and I suppose here we're still consolidating that spike that we had at the end of October towards 1.4 pence. What's interesting now is it looks as though we've got a final bear trap there down towards 0.75, that sort of thing, falling wedge rebound. And I suppose if one is accurate about it, you could say that the shares closed right on the resistance line of that falling wedge and the 50-day moving average around 0.92. What we're looking for now really is a decent close above 0.92, 0.93, something like that, to then trigger a fresh leg to the upside for the shares as high as the top of that broadening triangle from last year up to 1.6 pence. So break of the 0.92 area could take the shares up to 1.6 over the next couple of months on the basis that we've managed to squeeze out all the weak hands over the post-October period. This stage only really back below 3/4 of a penny, really delaying the idea of a final push to the upside. Just a couple of stocks to go now. One is Metal Tiger, which is behaving a bit like Kazira was as well, that we've had that sort of pullback from way back in May. I think there's probably enough now in terms of getting rid of the weak hands over the last 9 months or so. What we'd like to see is a break of 22 pence and that May resistance line, and that could take the shares then up towards the upper 20s, post-August resistance at 28 pence. But we've got a bullish divergence line there, so hopefully the next time that resistance line from May is broken, the shares will push up towards the upper 20s. Finishing off with another stock which has a bullish divergence line in the RSI window, and in fact also has a bear trap, so like a 3-day bear trap below the initial January support at 44 pence. That's normally enough to sort of shake out the last of the stragglers in a situation where there's going to be a turnaround. Got the bullish divergence line there from the beginning of this month, and the view now is that above 44 pence and former post-July support at 44 pence, we could see the shares at least head up towards the 200-day moving average, 55, 56 pence, which was also the late December peak. But surprising to see a copper play having retraced so much from the best levels of last year, given the copper is one of the strong metals at the moment. That's it for me today. More